This is Rod Kusin and Spooman for Risk on September 23rd, 2009. All times stated are in Central Time. We're going to make several videos today about the various trade setups that we saw. And because we've got so many of them in this particular case, we're going to separate this into several parts. So look at the part that you're on now, how many parts there are to this series of videos. I think we're going to wind up with about 3. And let's first of all concentrate on what the premium was telling us the spoos were going to do before it happened. If you don't know how to read the premium, go to the website RSKsys.com and you'll find the rules that we use for trading with the premium. New lows on the premium mean the spoos are going lower, or the premium is going lower, or both. And all you got as the market opened was primarily new lows on the premium. So within the first half hour, you were basically looking for an opportunity to short the market. Fed days, however, are historically long. So eventually we're going to need to go long today. Where? We'll show you in the next video. But the lows on the premium here are very clear. The market's going lower, so we need to short the market. Now, a little later on, we get into a nice, clear-cut setup. Right at around 9:30, okay, right in here, we have a new high on the premium at 9:31, 67.25, and the market does not go higher, but instead sells off a bit more. Now you've got a real solid plan. Look for somewhere to go long as the market dips down into these lows. We'll show you where we went long in the next video. But there's the plan. Go long because you know the market's going to rally back to at least 67.25 or better. What happens? Just exactly that. As it finally moves back to 67.25, right at that time the ES premium gives us another new high. It's going higher than 67.50. It does. Okay? Now somewhere in here, you may be looking to get out of this trade. We're moving into the announcement. You don't know perhaps exactly where to go, where to get out. But eventually you're going to need to. We'll show you where we got out before the announcement, or at least where the strategy said we should go get out of this trade. Now, something that I need to show you here, which doesn't frequently occur, is somewhere right in here, data was lost on the S&P premium. Data was lost on the S&P premium. And that's why you see these erratic moves. I would presume that in all likelihood the futures half of the premium equation was lost, and so all you got was the cash index. But this is spurious data, unreliable, and should be ignored. However, the ES premium is clear. As the market moved down to 67, we got a new low on the premium, and then again, right in here, another new low. So at this point in time, you're right into the announcement, and the premium has told you this market is coming back to 67. At least that's what you can tell at the time. So as the market is rallying up here, you're already thinking you need to short this market. And shorting it ultimately made a made into a very good decision. We'll show you where we shorted the market in the next video. At 13.24 we hit another new low on the premium, but the market didn't go lower. This premium bar overrides the previous premium bar. All we can say is that the market should go lower than 1070.25. So we look again for an opportunity to short the market. We'll show you where on the next video. Now you're all excited about the short that's happened, especially after this robust move up into a new high for the year. And we get another new low on the premium here at 72.25. All that's telling you is that it should go lower than that price. You can't predict much more than that. So you'd have to have something else to tell you where to get out of the short trade. Because the market very quickly dropped off and continued to drop off all through the course of the afternoon, with new lows on the premium being hit. So depending upon where those premiums hit, if you hadn't been short, here's a good opportunity to go short. New low on the premium, market pulled back just a little bit, look to short the market, and that worked out quite nicely. We'll show you where we took our trades in the next video. So at this point in time, you'll want to go to September 23rd, part 2, and look at how we traded based upon what the premium told us the market was going to do. This is Rod Kusin and Spoon Man for Risk.